$250 billion. Elon is literally buying his own AI company with space money. I don't even know how Sullivan and Cromwell modeled that out.
Oh, come on, you're blinded by the zeros. The real shocker today isn't tech incest. It's KKR dropping $2 billion on Nothing Bundt Cakes.
Wait, really? $2 billion for frosted rings?
Frosted rings with massive private equity upside, Nate. But fine, let's talk about how we're pricing artificial intelligence on Mars first. The rundown.
$14.2 billion just to buy back your own factory.
Well, 49% of it. Intel is basically unwinding their Ireland fab joint venture. But yes, that is a massive check to write just to get your keys back.
It makes sense, though. First quarter deal values are just surging. Legal advisors are saying transactions over $1 billion are up 300% compared to last year. People are spending big.
Mostly on anything touching AI, which brings us to Ecolab. They're paying $4.75 billion for CoolIT Systems.
Liquid cooling? Because AI data centers run hotter than a pizza oven. It's actually a brilliant pivot for Ecolab. They do water and hygiene. Now they're keeping server farms from melting down.
I read the release. The multiple is aggressive, but I guess if you slap AI adjacent on the pitch deck right now, the valuation doubles.
Oh, come on, it's highly strategic. Speaking of aggressive valuations, Danone is buying Huel for a flat $1 billion.
$1 billion for powdered food.
Bro Chow. They bought premium Bro Chow.
I can't believe Danone is paying a unicorn valuation for a company that makes meal replacement shakes for tech bros who forget to chew. Their health-focused food portfolio must be really desperate for growth.
I disagree. Huel has weirdly strong brand loyalty. Danone plugs that into their global distribution. Margins go up. It pays for itself in 5 years.
We'll see. I need to look at the subscriber churn data first. Meanwhile, Gilead is expanding its autoimmune pipeline. $2.2 billion for Ouro Medicines. Pretty standard pharma bolt-on.
Standard, sure. Not like the absolute regulatory nightmare Mohawk Industries is having down under.
Oh, the carpet drama.
The New Zealand Commerce Commission is throwing up a brick wall on their buyout of Bremworth Limited. They pushed the decision deadline all the way to May 29th. Just total deal limbo.
Regulatory purgatory is the worst. At least Ray V. Whale and RTB Digital made it through. They're listing on the NASDAQ tomorrow under the ticker RTB.
I love a clean merger. Watch Court Square Capital 2. They just took a majority stake in Call Tower. Cloud consolidation is very real right now.
True. But honestly, all these billion-dollar deals feel like pocket change compared to our main stories.
Exactly, because KKR is spending $2 billion on Bundt Cakes, and SpaceX just dropped $250 billion on xAI. The big one. $250 billion. I just need to say the number out loud to make sure I'm not hallucinating.
You aren't, but the valuation model might be. SpaceX buying xAI for $250 billion is the most Elon deal to ever Elon.
Sullivan and Cromwell is definitely not hallucinating. They're advising on this, and it just rocketed them to the top of the Q1 Global M&A League tables. The fee pool on a $250 billion transaction is enough to buy your own fleet of rockets.
Or a small island nation. But Nate, look at the actual structure here. This is essentially one piece of the Musk empire eating another piece. I read through the early disclosures, and the synergy logic is wild. They're claiming xAI's compute power is strictly necessary for Mars colonization trajectories.
I actually buy it.
Oh, come on. You buy a $250 billion price tag for a company that was valued at $24 billion just a few months ago.
Yes, because it's an arms race. Look at the broader market data right now. Legal advisors are seeing deals over $1 billion jump 300% in value this quarter compared to last year. AI is the primary driver for all of it. If SpaceX wants to solve the physics problems of getting humans to Mars, they need artificial general intelligence. You can't outsource that to Google. You need it in-house.
That's a great pitch deck narrative, spoken like a true former banker. But where is the cash coming from? SpaceX is cash flow positive, sure, but not $250 billion positive. This is going to be almost entirely equity. That means massive dilution for existing SpaceX shareholders, just to buy a company the CEO already controls.
The investors don't care, Maya. They want exposure to xAI, and this is how they get it. It's a brilliant consolidation play.
It's a corporate governance nightmare. But fine. Let's pivot from colonizing Mars to colonizing suburban shopping malls.
My favorite deal of the week.
Private equity giant KKR is buying Nothing Bundt Cakes for $2 billion. $2 billion for cake.
Do not disrespect the Bundt. Have you had the red velvet?
I prefer the lemon, but that's beside the point. $2 billion is a massive buyout for a bakery franchise.
It's classic private equity. Industry watchers are screaming about PE firms aggressively taking companies private this quarter to drive operational efficiency. KKR knows exactly what they're doing. They're satisfying a sweet tooth and finding reliable cash flow in a weird consumer market.
I just love the juxtaposition. We've got artificial intelligence mapping the cosmos for $250 billion, and then $2 billion for cream cheese frosting.
There is a buyer for everything. Well, almost everything. Mohawk Industries is finding out the hard way that New Zealand regulators do not care about your carpet synergy.
That regulatory wall is fascinating. Let's get into the Bremworth limbo right after this. Voices.
So the consensus from the legal advisors this week is wild. Transactions over $1 billion are up 300% from last year. 300%.
I saw that, and every single market analyst is parroting the exact same line. They claim artificial intelligence is the primary strategic rationale driving these mega deals.
Well, they're not wrong. Look at SpaceX swallowing xAI for $250 billion. That's pure AI FOMO driving the biggest check we've ever seen. It completely validates the narrative.
I completely disagree. The AI excuse is just a shiny object. It's a convenient way to justify absurd multiples to limited partners. Look at the other trend the industry watchers are highlighting right now. Private equity is aggressively taking public companies private.
Right, to drive operational efficiency away from the public eye.
Oh, come on, Nate. You know banker speak when you hear it. They're taking them private because the public markets are punishing companies with bad unit economics. They need to hide the mess in the dark. It isn't about AI. It's about escaping quarterly earnings calls.
Okay, fair point on the earnings calls. But you can't tell me AI isn't the main catalyst. Ecolab is dropping almost $5 billion on CoolIT Systems. Liquid cooling is literally infrastructure for AI data centers.
Sure, the infrastructure plays are real, but then explain KKR.
What, you don't think KKR is using machine learning to optimize frosting?
They just bought Nothing Bundt Cakes for $2 billion. $2 billion. Unless those cakes are writing Python, the AI narrative has limits. Sometimes PE just wants cash flow and sugar.
Honestly, a $2 billion cake deal makes me so happy. It's peak private equity, just a giant leveraged buyout of red velvet.
It really is. But speaking of messy situations that can't be fixed with frosting, we need to talk about what's happening down in New Zealand. Spill the tea.
$2 billion for cake, Maya. $2 billion.
I read the KKR press release 3 times looking for an enterprise software pivot. Nope, just frosting.
It's very good frosting. But seriously, KKR scooping up Nothing Bundt Cakes for $2 billion? That is peak private equity. You know, some exhausted associate in a fleece vest built a DCF model projecting 5% year-over-year growth in red velvet consumption.
Honestly, the unit economics on premium baked goods are probably better than half the SaaS pitch decks you used to read. The margins on flour and sugar are wild.
I refuse to believe we are valuing Bundt Cakes like a mid-cap tech stock. I just refuse.
You say that, but wait until KKR strips out the middle of the cake and sells it back as a premium add-on. Oh wait, it's a bundt cake. The middle is already gone.
Okay, that was terrible.
I'm very proud of that one.
Let's talk about a deal that is actually stalling out. Mohawk Industries.
Ah, yes, the great New Zealand carpet crisis.
Exactly. They are trying to buy Bremworth, and the New Zealand Commerce Commission just threw up a massive roadblock. They are planning to issue a statement of unresolved issues.
Which is regulatory speak for we hate this deal, but we need more time to explain exactly how much we hate it.
They pushed the decision deadline all the way to May 29th. Mohawk is just stuck in total limbo down under.
I looked at the market share numbers. If you put Mohawk and Bremworth together, you basically own the floorboards of the entire Southern Hemisphere. I actually agree with the regulators on this one.
Oh, come on, it's carpet. Are we really worried about a wool monopoly? Let them consolidate. The operational efficiencies are totally obvious.
Spoken like a true former banker. A monopoly is a monopoly, Nate, even if it's fuzzy and vacuumable.
Fuzzy monopolies. I love that. Anyway, speaking of things to watch tomorrow, keep an eye on the NASDAQ when RTB Digital officially lists after that RIVYL merger. Tomorrow's radar. Tomorrow morning, watch the NASDAQ ticker RTB. The RYVYL and RTB Digital merger is finally live.
I'm honestly more interested in the cloud space. Court Square Capital just took a majority stake in Call Tower.
You think private equity will just keep eating public cloud companies? The multiples are totally absurd right now.
They're really not if you actually read the cash flow statements. Firms are taking them private to fix operational bloat away from the 90-day earnings cycle.
Spoken like a true spreadsheet apologist. Speaking of bloat, Mohawk Industries is stuck in regulatory purgatory down under.
Right, the Bremworth buyout.
The New Zealand Commerce Commission is issuing a statement of unresolved issues, which is the polite Kiwi way of saying this deal is a mess.
Wait, they pushed the deadline all the way to May 29th over carpet manufacturing.
Never underestimate big carpet, Maya. It's an industry with wall-to-wall drama.
That is an awful pun and a perfect place to stop. We'll see you tomorrow.